Let's take a look at the income and asset menus. These menus are somewhat complex and serve to incorporate every aspect of any asset, whether it be a 401k, a defined benefit plan, a piece of real estate, or just about anything you would need to input into the plan. Let's first look at the desired income menu. Once you click on that tab, a list of subtabs is going to appear below if you have already filled out the schedule. Whether you have or you haven't done that, there will always be a link that reads Create that allows you to make inputs here. Let's click on the Create link and have a look at the blank desired income menu. The first drop-down box at the top of the page underneath the report name allows you to categorize what kind of income you want to input. Below that, you can enter an annual amount and input which years this income will apply to the plan. The default setting is in all retirement years. At this point, let's click on the blue link below Living Expenses for an example of how to properly use this menu. Now, you could potentially use a total sum of all living expenses and input that amount, apply it to all years, and include an inflation rate right below that. But if you want to parcel out the various kinds of living expenses, click on the blue button with a plus sign. This button opens up another line where you can enter an amount and which years that amount will apply to the plan. You can continue opening up lines here for a total of 6 slots. This function applies to all of the items in the lower box titled Budget. There are 7 categories of discretionary income, each with the option to further subcategorize up to 6 times. Based on what you learned about inputting inflation rates in the schedules, simply apply the same logic here. Enter the rate and which years you want it to apply, and additionally, you have the option to add in a second inflation rate if you'd like. The interpolate function below inflation rate allows you to estimate data points or create median data points for income or expense ranges that you know the beginning and end of. For example, if you knew a client was going to be making $50,000 per year in the first year of the plan, and that he would be making $75,000 10 years from then, you could interpolate these 2 beginning and ending incomes and create median incomes for years 2 through 9. This is a helpful tool when you are analyzing things like life insurance or long-term care costs or making estimates about incomes or expenses. The red Remove button is just for interpolations, so if you want to unapply interpolated incomes, you can do that with this. Right above that Remove button is the Clear Table button. This will wipe any data you have in the after-tax and including inflation columns in the middle, without removing any of your inputs on the left side of the page. Similarly, New will wipe all of the data on the page and give you a clean slate to work from in all columns. Lastly, the View Summary button will bring up a pop-up that has total combined desired income from each category, including inflation, in an easy-to-scroll and read window. Below the desired income menu, you'll see Expected Income. This menu works exactly the same as the previous one that we just talked about, with the same look and feel and all of the same buttons. The only difference is that you'd be inputting expected rather than desired incomes. So, for example, wages, salaries, Social Security income, and things like that. The next menu is our Liquid Assets. Clicking on any of the links below Create will bring up an asset account that you have already created in the schedule. At this point, you can make adjustments to any of the details like value, management fee, growth rates, or anything that you can see there. Much like we did with the income menus, let's explore what this looks like after hitting the Create button. The first thing you should take note of is the Type section, where you will specify exactly what kind of account this is. If you select from the different radio buttons, you'll probably notice some changes below. Cost basis, withdrawal limit, and death benefit guarantee fee will show up when they could possibly apply to an account. Also notice that equity accounts have dividend rate, turnover rate, and long-term growth portion. After the correct type of account has been selected, you'll want to enter the account name, current value, and the management fee as a percentage. Below that, you can enter the growth rate, followed by a second growth rate at a later time if applicable. If a certain portion of this asset will be gifted to charity, you can select the checkbox next to charitable bequests starting at, and then input the age at which they should begin. Then below that, you can select either a percentage of the account to be gifted each year or a specific dollar figure. The radio button selection below, how will this asset be distributed, controls income distributions. So this is a separate of charity gifting. As needed will allow the account to make income distributions to meet the level of desired income needed each year, while per the schedule allows you to control exactly how much income can be taken year over year from this account. If you click the schedule button, a schedule of the account's value year by year will appear. In the withdrawal column, you can specify how much income should be taken. The start and end values will automatically update for you, so make sure to hit save after you've finished inputting your entire distribution schedule. The next menu down is our list of pension assets. Notice that there are two types of account selections in this menu: contribution and benefit. Let's look at contribution first, as that is going to be a much more common pension asset these days. After entering account name and selecting whether the account is for the client or spouse, you can select the type of pension asset, whether it be a 401k, IRA, or SEP in the drop-down menu. In the pension assets menus, you have the ability to enter penalty information for making withdrawals earlier than age 59.5, or if there was another potential reason for penalty. You can also illustrate this pension asset as for stretching to your heirs in the area below in bold. On the benefit selection of pension assets, you'll see a similar layout as you did for inputting incomes. The reason should be pretty obvious, as this menu is for inputting a defined benefit pension asset that pays income to either the client or spouse. All you need to do is enter the amount and inflation rate if the payout is as such, or enter the appropriate income that will be received in each year. Be sure to hit the save button after you've input the income stream. Moving on, the next menu is for illiquid assets. By selecting any of the links in blue besides create, you can edit the details of any illiquid assets you've already created using the schedule. To create a new illiquid assets, and for our learning purposes, let's hit the create link. The first few things you'll need to do is give the asset a name, a value, select which type of asset it is, and assign a growth rate. The next box below that gives you the option to illustrate the loan on the asset. You'll need to click on the checkbox next to Illustrate Loan and then fill out the details of remaining balance, years left, interest rate, and whether the loan is amortized or interest only. If you are recommending a refinance or the clients plan to on their own accord, you can illustrate that in the next box down. Again, select the checkbox next to Refinance Loan in Year and fill out the details. As soon as you enter in what year you want to refinance and click to the next input, the liability balance will be displayed for you. In some situations, the balance shown won't reflect the actual balance in the future if the client intends to make a few extra payments or what have you, so you still have the flexibility to enter in any loan balance right below the displayed liability balance. Whether or not you plan to illustrate the refinance of an asset, you can illustrate the sale of one in the third box down. Much like in the refinance box, once you've selected the checkbox next to Sale of Asset in Year and then enter a year next to it, the projected asset value for that year will be displayed. As well, the standard excludable gain of $250,000 will be automatically entered for you. You'll need to input the cost basis and the sale price. Normally, when someone does sell an illiquid asset, especially a primary residence, a replacement residence will be needed. Notice the small checkbox at the very bottom titled Replace Asset. If this is going to apply, check that box and hit Show Replace Details. On this screen, enter the details of the replacement asset and the mortgage if that will apply as well. The last menu is Other Assets. This menu is for inputting miscellaneous assets that pay income into the plan. The first thing to do is select whether the asset is inside or outside of the estate using the radio button. And right under that is the type box where you can select the type of asset. Then, from that point, the menu works just like our desired or expected income menus.